Hello guys and welcome. In this lecture I will introduce you to the setup of the second day trading and scalping strategy. Let's jump straight into the action. The first thing that you guys need to do is to choose this layout right here with two separate windows. We are doing the same thing like with the previous strategy. We are trading on two different time frames. Now let's start adding the indicators. We're gonna first add the indicators on our anchor time frame. So we're gonna need here moving average and exponential moving average, right? So we need moving average exponential, moving average simple, right? These are gonna be the 200s and one more moving average exponential, right? That's important for you guys to remember. Then we're gonna move to the trigger chart and we're gonna add EMA. We need two exponential moving averages. One, two. You just click once and then you click another time to add two exponential moving average. So again, on the trigger we have two exponential moving averages. On the anchor we have two exponential and one simple. Now let's start adjusting the moving averages. The first moving average on the trigger chart is gonna be the 34 moving average. So you change the length to 34, go to style, make it yellow and make it thicker. Then hit OK. That's the first thing. The second thing is to adjust the other moving average, which is gonna be white. We're gonna make it thicker and we're gonna go to inputs and we're gonna change it to 55 because these are gonna be the moving averages we're gonna be using for this strategy, 34 and 55. Now we're gonna go to our anchor chart and we're gonna start adjusting the moving averages right here, starting with the first one. The first one is gonna be the 55. We're gonna go to style, we're gonna make it white again, make it thicker, hit OK. The second one is gonna be the 200, right? The simple 200 simple moving average. We're gonna make it red, thicker, inputs, 200, hit OK. And lastly, the third one is gonna be the 200 exponential moving average. So change the length to 200, change the color to a little bit lighter red, make it thicker, hit OK. Now you can save your chart just like this, and that's it. We are pretty much done with the setup. The rules, the criteria for entering and exiting trades. So we're gonna use our notes for the previous strategy right here. Because again, you guys have to understand that we have anchor time frame for directional bias and trigger time frame for execution. Now, what are the rules? Well, first of all, you guys should already be familiar with how we use the 200s, right? We use the 200 simple and 200 exponential moving averages for directional bias. When price is below the moving averages, we look for short trades only. When price is above the moving averages, we look for long trades only. This is the first thing. However, there is also another moving average, right? We also have the 55 moving average. So what do we do with the 55 moving average? Well, it's the same thing, right? When price is below the 55 moving average, which is the white one right here, we are only looking for shorts. And when price is above the 55 moving average, we are only looking for longs. So it is basically the same thing. I'm just gonna add here some notes. So this is for the 200s, right? And this is for the 55. It's basically the same thing. So that's about the anchor time frame. And don't worry guys, I'm gonna give you plenty of examples. Now let's switch to the trigger time frame. On the trigger time frame, the entry is basically when the 34 EMA, which is the yellow one, when the 34 EMA crosses below the 55, enter short trade, right? And when the 34 EMA crosses above the 55 EMA, the white one, enter a long trade. That's about the entry. What about the exit? Well, for the exit, guys, just like with our previous strategy, you can either target something like 2 to 1 rewards to risk or even more than that, or you can simply wait for the 34 to cross back below the 55 if you are in a long trade, or to wait for the 34 to cross above the 55 if you are in a short trade. So for example, if you enter a long trade right here on this bull cross, right, you're gonna exit this long trade when the 34 crosses below the 55. Just like here. So for example, if you enter on this bull cross, you're gonna exit on the bear cross, right? Bull cross is when the yellow crosses above the white line. Bear cross is when the yellow crosses below the white line. And the opposite is for shorts. So you enter on a bear cross when the yellow line crosses below the white line, right? And you exit on a bull cross when the yellow line crosses above the white line, right? Or you have 2 to 1 reward to risk ratio, something like that. I mean, you either have a predetermined take profit target or you don't have, right, and you are just waiting for a cross. These are the rules for the strategy. If you guys have any questions, please let us know. Now we're gonna look at some examples, right, so you guys better understand how this strategy works. We're actually gonna do the following. We're gonna look at the same coins that we look with our previous strategy. So let's start with cream. I believe cream was the first one that we look at. Where is the good old cream? Right here. Okay, so here we have the good old cream. Now we're gonna look at the results from this strategy for the last 7 days, starting right here. So let's now look carefully at the setup right here, first on our anchor time frame to see what's going on, and then we're gonna look at our trigger time frame. By the way, let's delete this because you guys might get confused because we're gonna be adding more trades. So here is the June 23rd, and let's see what did we have at the time. So 200s, a price below the 200 but above the 55. So during these situations you are not really looking for any trades, right? Because you guys already know that you don't only need the price to be below the 200s in this case, you also need it to be below the 55 in order to look for shorts, right? If price is in between, then you don't look for any trades because this means that there is no clear trend, the market is consolidation, and you're only gonna get wrecked. And you see guys, this is exactly what happened, right? If you are looking, if I didn't give you let me see which one is the 55. Okay, if I didn't give you this second criteria for the 55, you guys were going to look for shorts right here and you were going to get wrecked. That's why I'm giving you this criteria, right? In order for you to be safe, right? And you not to look for shorts during this time. Now, what happened next is price actually broke above the 200s. And in this case right here, price is above the 200s, but the 55 is below the 200. Another thing that is very important for you guys to know is that it's also good to wait for the 55 to be above the 200s as well, right? Something like this. When you see this price above the 200s, the 55 above the 200s, and price above the 55 as well, well, this is the ideal scenario to start looking for long trades. However, you see that nothing really happened here. We never really got a signal. I mean, when we got the signal, the setup wasn't present, right, on the anchor time frame, so you are not going to take this trade. If we got another signal somewhere here, you could have taken it, but we didn't, right? Price actually went below the 200s. But the question I have for you guys is, were you going to take this short? Were you going to take the short, yes or no? Not really, because the 55 is above the 200s, right? Ideally, you would guys wait for the 55 to at least start crossing below the moving average, right? Something like what happened here. So in this case, price is below the 200s, price is below the 55, and the 55 is already below one of the moving averages. So can you take this trade? Absolutely, right? It's a little bit of a front run. Actually, let me see. We got the cross. By the way, guys, what we're gonna do now, you see these values right here, the yellow and the white line. We wanna know when exactly the cross occur, right? So, and you're gonna know by looking at the numbers, right? I'm gonna be pointing my mouse on the candlesticks right here, but I want you guys to look at the numbers because we have to identify the candle where the yellow value dropped below the white value, right? So right here on this candle, the yellow value is 61.62, the white value is 61.61, so the yellow value is still above the white one, which means that the 34, the yellow EMA, is above the 55, the white one, right? However, on the next candle, you see that this is the candle where the yellow value, the 34 EMA, actually crossed below the white one, the 55, right? So this is the entry candle. Now I will keep my mouse on this candle right here, but I want you guys to look on our anchor time frame and to figure out what happened there. So this is the exact, actually, wait, I moved my mouse. So this is where my mouse should be, okay, on this candle. Now again, guys, I want you to look on the right side where the anchor time frame is and to identify what was going on at that exact time. So price was below both of the 200s, right? And below the 55 as well. However, the 55 was just crossing below one of the EMA. So could you have taken this trade? Well, absolutely. But the reality is that This is a little bit of a front run, so you might have as well ignored this trade. I'm not gonna sit here pretending that you are 100% going to take this trade, right? It's kind of 50-50. So we're not really gonna count this one, even though it's a great trade as you guys can see. This one went down a lot, right? And this was the exit all the way down here. But again, the situation here is 50-50, so we're not gonna pretend that we took it. You could have taken it, you could have not, right? It's really up to you if you're gonna be taking this front run trades or no. Now, the next setup occur right about here. And this is actually a valid setup where, as you guys can see, price is well below the 200s and well below the 55, and the 55 is clearly below the 200s as well. So this is a valid trade. Let me see just where about is the entry. The entry is just right here on this candle. So let's get the good old measurement tool right here. Let me see again. So yes, this is wait, 58.9. Okay, so this is the entry candle, this one right here. Stop loss above the swing high right here, and you could ride this bad boy down either for something like 2-to-1 reward to risk, right, which was going to happen right here, or you can wait for an exit signal from the EMAs. If you wait for an exit signal, you are actually going to exit all the way down here, so you are going to make more money on this trade, something like this, because you are going to get exit all the way down here, right? So you are going to make around 3-to-1 reward to risk compared to the fixed 2-to-1 if you are having a predetermined take profit target with 2-to-1 rewards to risk. And that's pretty much it. This one trade during this whole week, that's on cream. And by the way, now we are getting another signal just right now, as you guys can see, for a short trade right here. Now let's move to the next coin. What was our other coin? Jasmy and people. So let's look at Jasmy. What happened with the good old Jasmy? The good old Jasmy, on June 23rd, it was in a clear downtrend. So let's see if we got some trades right here. So when we got this entry short signal right here, where was the good old Jasmy? Wait, actually what we gonna, yeah, let's see. The good old Jasmy, at the point of the entry right here. By the way, let's also delete these 4 drawings. At the point of the entry, the good old Jasmy was below the 200s, obviously, and below, let me see, let's actually get closer here. By the way, I will disable, I will disable this feature for now the time, because it's kind of messing up here our test. So the good old Jasmy at the point of the cross, which occurred right here, the good old Jasmy was well below the 200s, and it's just close below the 55, and the 55 is below the 200s. So this is a valid short entry right here. That's a beautiful short with an entry right here, stop loss above this swing high and above the moving averages ideally, and target of either 2-to-1 rewards to risk or more, or waiting for an exit for the EMAs, which in this case was going to cut your profits a little bit. But hey, profit is a profit, as you guys already know. So this is then a bull cross right here. Let's see what happened. Then another, this bull cross, by the way, we're not going to take because we are below the 200. Then another bear cross, and let's see what's going on here. Is this a valid bear cross? I mean, is this a valid short trade, I should say? Let me see, price below the 200s. Let's see, first of all, it occurred on the next candle. Price below the 200s, however, above the 55. So this is not a valid short. Now, this is what about the long right here? Not a valid long. What about the short right here? Short right here, where we are, price is in between the moving averages, so that's not really a valid short. What about, let me see, did we get a bull cross here? No, the moving averages were just flat, but they were at the same value, so we never really got a bull cross, and here as well. So you never really got another opportunity to enter a trade until now, right? So there is nothing really except for this trade right here on Jasmy. Now let's go to the good old people. good old people to see what happened there. People. On people starting on June 23rd, let's see what happened. So, people on June 23rd, we got this bear cross. Is this a valid short? Let's see. Is it a valid short? I want you guys to look on the, and I will zoom in a little bit. And I want you guys to look on our anchor chart and tell me if this is a valid short trade right here. Were you going to take this short trade right here? You guys think about it and tell me. Yes. Why? Why? Because number one, we are below the 200s, price is below the 200s. I should say number two, price is below the 55 as well, right? So this is a valid short trade right here. And let me see, where is the good old 2? So entry right here on this candle, stop loss above this. Did we get an exit? Actually, stop loss didn't really get hit, but it was very close. Let's see, 2 to 1 reward to risk. And that's a decent trade if you took 2 to 1 reward to risk. If you waited for the exit from the EMAs, you were going to be at a loss, right? Your stop loss was not going to be hit completely, but you're going to lose half of your risk per trade because you were going to have to exit right here when the moving average is crossed. So that's the first trade. Now let's see what else did we get. Long trade, not a valid trade. Short trade, not a valid one because we are above the 200s, right? Long trade, not a valid one because we are in between the 200s. Short trade, not a valid one. We are in between the 200s. So too many criteria that are not met. Bull cross, not a valid entry. Wait, let me see. This is bull cross. Wait, let's see. So this is the candle where it actually happened. Price was above the 200s, above the 55, and the 55 was just about to cross the. So this is another one of these front run trades. And again, we're not gonna pretend that we were going to take this. Again, it's up to you guys. These are 50-50 trades where I'm leaving it up to you to decide if you're gonna be taking it or no. You just have to know that not all the criteria are met, but 90% of it is so good, right? So you can go with it or you can just wait for 100% of the criteria to be met. It's really up to you. Then another short right here, not a valid short. Another long right here, which is a beautiful and a valid long trade, right? Because why, guys? Why is this a beautiful and a valid long trade? Well, because number one, price is above the 200s. Number two, price is above the 55. Number three, the 55 is already above the 200s, right? So a beautiful long trade right here. Where are we? Okay, this is the entry candle. Stop loss below. You can put it all the way down below this, or you can put it below this right here. That's totally fine. And 2 to 1 if you choose 2 to 1. If you chose 2 to 1, your take profit is going to be hit. If you waited for the exit from the strategy, which is gonna happen when the 34, the yellow one, crosses below the 55, you will be still in this trade, right, waiting for an exit. Now, quick summary of the results. What do we have here? 2R plus another 2R, 4R on people. If you had the predetermined take profit target, that's on people. So 4 reward to risk so far. On Just Me, what did we get on Just Me? I think 1, 2, so 6 rewards to risk. And on the good old, what was the good old cream? On the good old cream, we got nothing but this one short for like 2 rewards to risk with the predetermined take profit target, which brings us to 8 total reward to risk. So easy calculation for you guys. If you are risking $50 per trade, that's $400, right? If you are risking $100 per trade, that's $800, right? If you are risking $20 per trade, that's $160 profit, right? So yeah, that's just to give you an idea of how much profit you are going to make if you traded, best case scenario, if you traded these 3 coins which delivered the best results during the last 7 days. If you traded these 3 coins with this strategy, that's about how much money you are going to make if you had this risk per trade as well, right? But there are many ifs here, and I understand that. It's just I want to give you guys an example of how this works, and then you can do your own calculation, right? Because I don't know how much is your risk per trade, right? I don't know how much it is. I don't know which time frames you guys are gonna be trading, right? I'm just showing you here if you're trading the 15 minutes time frame together with the 1 hour time frame, right? If you trade the 5 minutes time frame, there's also going to be different. If you trade different coins, yours also going to be different, right? There are many ifs, but the purpose of this is just to give you an idea for what you can expect from these strategies. And that's basically the end of this lecture. If you guys have any questions, please let us know.